Hey everybody, welcome to Trading the Close. My name is Gareth Soloway here at verifiedinvesting.com, and we have a lot to discuss today. So this morning we got inflation numbers that actually show inflation is going up. What was the response? Well, gold rallied. Okay, that makes sense. Bitcoin rallied. That makes sense. The stock market also rallied. I'm not sure if that makes sense with inflation going up, but I think the kicker here, to understand it fully, is that the markets basically are locking in. In fact, the percentages chance of a rate cut next week soared to almost 100%. So essentially the markets are saying, okay, yes, inflation is going up, but the Fed will still cut next week. That's basically a guarantee at this point. So let's buy stocks. Let's keep running this market up. However, there are signs of trouble, and we're going to get into it. All right, so before we do that, let's take a look at what the markets are doing today. And if we take a look here, Dow is actually struggling. But again, as I always say, guys, the Dow is 30 stocks. So if you have one or two stocks that are struggling, it's going to basically mean that that index is down or flat on the day, even while the NASDAQ is having a monstrous move, up 1.8%, 357 points on the day. The S&P obviously performing less well as it's 500 stocks, and again, that's up 43 points or about 0.72%. Now, again, just to understand here, what we're seeing is we're seeing Tesla continuing to go up. Tesla making new all-time highs around $420 today. Yes, it's overbought, but it's a momentum trade. When Bitcoin goes up, honestly, usually Tesla goes up. It's almost like that momentum risk-on type of trading environment. All right, today, oil pushing up. Now, this is key. Oil's above $70. I'm going to show you a trend line, but I think it's actually now going to $74, at which point I will be contemplating a short. That's a key technical level. Gold today pushing up. Now, the kicker on gold is that it likely is negating the wide range red candle. What does that mean? It means chances are you'll get a small pullback and then further upside, meaning the probabilities on gold have flipped now to being more bullish, even though you should get a small pullback, but more of a bull flag, and then further upside. So we'll watch that, and we're going to keep updating you. This is where we talk about how there's every day a new piece of the puzzle, and a good trader is always taking that information in and deciding what that means. How does it change the probabilities for the next move in that asset, essentially? Now, just a side note here, while gold is pushing up and negating the bearishness of that pattern and now becoming more bullish, silver, copper, nickel, all of them continue to be in bearish pattern formations. What is that telling us? It tells us that because of inflation, gold is being bought up as a safety hedge, but the industrial metals are still struggling. And again, very interesting to kind of think about what that could mean for the economy or what big money knows. Lastly, Bitcoin. Bitcoin pushing back above 101,000 here. What have I said about Bitcoin? I said, what's the upside? You guys should all know this if you've been watching. I said 107 to 108,000. That's still the likely scenario of where this is going. Looks a lot more likely today at 101.4 thousand, right? So amazing stuff right there as Bitcoin pushes up. The heat map, here's technology. All green. Google having a monstrous move. That new chip that they've debuted is doing great. However, there's a level on Google. If it gets above $200 a share, there's a big double top. Well, it's a trend line. It's actually an upsloping trend line. So watch that at around 200 or a pierce of $200. Here you have Microsoft up, Meta's up, Netflix is up, Salesforce is up. You name it, they're all up. Here's one to watch. I know you probably can't see what that is. That's the Adobe symbol. They report earnings just after the bell in about a minute or two. So we'll look into that. Financials, look at how mixed this is. A little bit of green, a little bit of gray, and a little bit of red, right? So it's a very mixed picture there. Here's electronic technology, NVIDIA up 3.5%. Apple, this is interesting. Apple put in a topping tail today. That's something to pay attention to. We're going to go into that chart in 1 second there. And then Amazon. So you can see the big number, the trillion-dollar companies are really carrying this market. That's why the NASDAQ is having such a big day today. All right, let's get into a couple of these charts here. If we look at the S&P, folks, again, we saw a roll over the last couple days, now a push up. I still think there's a chance we could go tag this. Again, that's where I'm patiently waiting to take that big put position on the S&P. Doesn't mean I'll be right, but that's where I'm willing, based on technicals, based on the cycle, based on all these factors, to put some money on the heavily sided short side of the S&P 500. Now, again, we have this trend line here, which again goes back here. And then if we flip over to the NASDAQ, I got to show you this, guys. So look at this NASDAQ. New all-time highs today, up about 1.8%. But I want to show you this, right? If we do a high pivot here, right? So let's do this. Let's take the low from COVID and connect it right through the lows of 2022's bear market and extend it out. All right, so we're going to take that line. Now let's extend a parallel up, and all of a sudden, what comes into play here? Look at this, guys. All right, let me go over to the big board and show you this. So if we take a look at this, and what's so amazing about this is this jives with the S&P, where it could have a little bit more upside into that trend line and then run into a stalling point. If we look at this, low pivot right here. This is a kind of COVID low, bear market low. So those are major pivot lows, right? I mean, those are major. Take the high of the bull market in 2021, extend that parallel, you're just about at that line. So we're close. We're close, folks. And listen, when I say close, I expect a pullback. Is it going to be a major cycle top, a major reverse? I have no clue. Just to be honest with you guys, I don't know if it's going to be a 3% pullback, a 5%, a 20%, a 50%. No one knows. But ultimately, what I do know is based on probability, there should be major resistance here, just like that trend line on the S&P 500. Very cool stuff, by the way. All right, let's go through a couple other things here. NVIDIA, looking at this, nice little bounce today, still underneath this trend line. That's still a warning sign for me. Apple, wow. Look at this, guys. I had it potentially going up a little bit higher to about 253, but you know what? That candle today on Apple, what is that candle? Let's go back to the big board and just discuss. So if you guys know your technical analysis, this is basic technical analysis, that's what we call a topping tail. All right, that's where price goes up and then it reverses. Essentially, institutions come in and say, hey, this is getting ridiculous. Let's dump our positions. That's what creates this long tail up here and a close in the lower area there. And again, in technical analysis, that's a topping tail. That's a bearish reversal signal. Now, listen, some of these charts like Google don't have that. But Apple, absolutely a bearish reversal signal today. Keep that on your radar. Another chart, Costco reports earnings after the bell tomorrow, was up sharply earlier today, reversing a little bit of a topping tail. So there's little cracks emerging. I'm curious to see Costco's earnings. I was doing some technical analysis. Well, I should say fundamental analysis, which I don't do very often. But with stuff like Costco, I'm intrigued. I looked it up. It's trading at a 60 PE and a forward PE of 51. I mean, you go to like NVIDIA, you go to like these semi-growth stocks like Powell, I mean, then you're in that range. Not a retail. This is why I think it's so ridiculous for Walmart, where Walmart's trading. Walmart, to me, it should be trading at half the price it is based on where the PE ratio is. Walmart should not be trading at a forward PE of 30 to 40. That's ludicrous. Historically, Walmart or any of these other players, it's usually like a 10 PE. Shows you how much risk and how much of a bubble is in this market. Okay. Bitcoin, we got to go to Bitcoin here, guys. You guys know your Bitcoin. So here it is. Here's your parallel. It went right off here. Boom. That's exactly what parallels tell you should happen, right? So here you were at your low end of the parallel. You went to your high end, back to your low end. Then you jumped, hitting your high end, went to your low end on the same candle, and then kind of came up, tested, and then boom. So what's interesting about this is if you move up into this level here, let's say we rally over the next week or even the next few days, and you go up here, look at how these two trend lines converge. Where is that at? 107 to 108, right there. Now listen, could it go a little higher? Sure it could. Listen, anything can happen at any time. Again, I'm right most of the time. I'm not always right, that's for sure. But the key is if we zoom out on this chart, what do we have here? Here's your big parallel. Look at that parallel here. And those two lines coordinate. That tells me there should be hefty resistance at around 108,000. Gold today. Let's talk about gold here. If we go into this one and we bring it up, let's do it there. All right, so what do we have on gold here? Let me flip back to our daily chart. Look at this beautiful move up in gold. Now the kicker is this. Now this is really interesting. So for this to flip bullish, gold must close above the red portion of the candle. So I'm going to zoom in because this is kind of interesting here. It looks like I'm trying to do this as closely as I can. All right, so let's discuss on the big board here. All right, so here we have gold. Gold, so this was when probabilities, let me freeze this here. Probabilities when it was inside this favored downside about 75 to 80%. Once it broke above, right above here, it went down to about a 65% favoring the downside. If you close outside a wide range red candle, right? So here's your wide range down candle. When you close above that, it essentially takes the power of that red candle away. And now all of a sudden it flips. And it's borderline. I mean, we'll have to see where it closes today, but it's borderline doing that. But that would be, if you close above, you know what that means? Like I said early on here, let's erase these lines so we can do it cleanly. If you close above, you would still expect a little bit of a pullback, but you'd expect this. Okay? So essentially cup and handle, which now means probabilities favor the upside. So we have to watch to see where it closes. I'll update you guys in the game plan tomorrow. But again, this is the understanding that it's a new piece of the puzzle. I was just doing a member video, and I said, the way you liken each candle, new candle of the day, is like as if you're playing poker, like the World Series of Poker. I don't know how many of you guys watch that, or have watched it, but when that next card turns over, you see the probabilities on the screen for each player changing based on what's their probability of winning. Same thing. Every candle is a new card that's being flipped over, and now the probabilities of upside or downside adjust accordingly. And that's so fascinating once you start to realize that as a trader, and that's why technical analysis is so fascinating as well, is because it really starts to give you insights into where you're not like an all-in bullish or not all-in bearish. Like those are retail traders. That's where the institutions honestly squash us, because they know that they can push us to our limits in both directions. They can push up high enough where we just jump in because of emotion, and then they can reverse it and push it down to our max pain, where we're like, oh my God, I can't take this. It seems like it's going to go down, and you dump. And where are we dumping? We're dumping at the exact lows, right, or really close. Using technical analysis, you start to gain that understanding that it's always fluid. And you want to play the high percentages, but even the high percentages don't always work out. But you need to know when it fails. And that's the kicker. All right, sorry to get off on tangents there, but this stuff is fascinating to me, and I do think it's fascinating to a lot of you guys as well. All right, so we'll watch gold here. Let's take a quick look at silver. Look at the underperformance on silver. I mean, silver flat today. It's still within the bearish channel. So again, as long as it doesn't break above, it's very heavily bearish. You would still favor that downside. It's an industrial metal more than anything now these days, and that favors the downside. Now look at oil. Oil, guys, right here. Oil breaking above this trend line. All right, I've been praying for action in gold so that I actually can get a trade-off here with my members of Smart Money Commodities. We got to close above. If this confirms, we should go up here to 74. That there, my friends, would be a shortable level. Finally, a little price action, maybe a breakout here, a mini breakout to upside to 74, and then maybe a trading opportunity. All right, ultimately, I still think the bigger picture is a breakdown here below 65 to 66, but that's where I want to get in. I don't want to short here because there's risk, but if I short up here, at least it's up more, and I have more downside even just back here, and then the bigger breakdown to the downside. Lastly, natural gas, hammered on this line the last few days, good little bounce here. No trade on this. Again, if it breaks here, it comes here. If it moves up, you have resistance right up here at this kind of double, triple top. Lastly, Adobe. Adobe getting hit. Looks like it popped initially. Here we go. So Adobe is selling off on earnings. It's not a huge sell-off. Looks like about a 5%er thus far, but obviously we'll watch it in real time. I'm going to trade it with the guys. They're trading in the earnings trader here in the after hours, so that's pretty cool. But yeah, we are seeing some weakness in Adobe, just like Oracle, remember? So we've been seeing more and more of these stocks reporting, and their earnings are just not high enough to justify how high some of these stocks have gotten. Like Oracle was at all-time highs. Dropped 7% on earnings, right? I mean, it's just they can't justify, even with their growth, it's just not good enough. All right, guys, great stuff today. Tomorrow we'll get the PPI data out. It's not going to be as important as CPI, but let's continue to watch that. I'll be back tomorrow morning with the latest trades, the setups, everything for the day right here at Verified Investing. I'll talk to you soon. Take care.